Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-timeframe technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about today is GBP JPY, and the reason for which I want to speak specifically about the GBP JPY is because the pair is very near to providing to us a good trading opportunity. So I want to provide a full breakdown of the pair to show you exactly what kind of situation we have on it and how we can be looking to capitalize on the next move of the pair. But as usual, I will keep the analysis as educational as possible, so that this analysis can give you some very important key concepts that you can apply to your own trading and that will make you a better trader. Now, the way in which I will be structuring the analysis is first from a technical perspective. We will be looking at the technical side of the market. We will then go and see what we have from an order flow perspective by checking the commitment of traders, which is what hedge funds are currently doing in the market. And by the end of the video, by using the combined views, both from a technical and an order flow perspective, we will be able to understand where are the best probabilities and where we can be looking to trade this pair in this current trading week that is about to start. So without further ado, let's get straight into the analysis. Now, starting from the monthly time frame, what we have is a market which has just provided a W formation. And after a W formation, what you want to see? You want to see the market complete the pattern at the neckline, which is this area here, which is previous resistance, which is now turned support, aka the neckline of the pattern and the completion zone of this specific pattern, from which after the market completes it, you expect the market to get rejected to the upside. So generally speaking, after the market creates a W formation, you expect a completion at the neckline and then the continuation to the upside for the creation of a higher high. And that is exactly what the market is currently doing here. In fact, what we can see is that the neckline of the pattern is this previous resistance now turned support, and the market, after creating the pattern, has completed it to the downside at the neckline and currently is rejecting the neckline itself, which is exactly what the market does in this kind of situations as we have just seen. So on the monthly, everything is very clear. If we check what we have, now this is a general concept, okay? If you have an impulse in the market and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. Now, this move to the upside that created the last leg of the W formation before the retracement is an impulse. So if you want to measure this correction after this impulse, you have to take your Fibonacci from the low to the high of the impulse. And what we can see is that the market retraced exactly to the 0.618 of the Fibonacci taken on this impulse. Now the 0.618 is the golden ratio. So we have a perfect golden ratio retracement before this move to the upside started. Now, if you're asking yourself, why has the market retraced exactly to the 0.618? Why exactly to this level? Now, first of all, as I just said, it is the golden ratio. The market after an impulse, most of the times, it does retrace exactly to that level. That is the point for which is actually called the golden ratio. But in this specific case, that is the Fibonacci level that is aligning the best with the neckline of the pattern. The neckline of the W formation is lining up perfectly with the 0.618, creating a confluence of support, which the market tested here before starting the rejection to the upside, which is again, exactly what you expect in this kind of situations. So on the monthly, everything is clear. Let's go down on the weekly and see what we have from a weekly perspective. Now on the weekly, we can see that also here, the market had provided a W formation. And in fact, I made a full breakdown when the market was here, explaining all the reasons for which we wanted to see this retracement. And that is exactly what the market did. The market completed also this weekly W formation at the neckline. Now, after the completion, what you expect the continuation to the upside, as I have already explained earlier. So you expect the market to create a continuation to the upside. And if we look closely, we can see that the market has already tested this new support with this wick, because the neckline of a W formation is a previous resistance, not on support, and the market has already tested it, and now the market has also created this candle here. Now this candle is a very specific pattern, okay? When you see a candle like this from a weekly perspective, what you will have on the daily most of the times is an impulse and a correction, in which the correction that you have on the daily time frame is exactly the wick that you see here on the weekly time frame. And generally speaking, after an impulse and a correction, what you expect is the continuation to the upside. So that is why when you see a candle like this on the weekly, what you expect most of the times is the next candle to fill in this wick. So what we can expect is the next weekly candle that is about to open to fill in the wick that we see in this candle. So at the moment, everything is absolutely clear. Let's go down on the daily and see what we have from a daily perspective. Now, on the daily time frame, price action is quite clean. We had spoken about GBP JPY a few times in the past. I spoke about the GBP JPY when the market was here, and I made a full breakdown explaining all the reasons for which from here I wanted to see the market create this move to the downside, and that is exactly what the market did. Then I made another breakdown when the market was here, explaining why from here we wanted to see the market create first a move to the upside, and then from here create a continuation to the downside for the completion of this W formation. And again, that is exactly what the market did, following exactly what we wanted to see from our past breakdowns, which, by the way, you find linked in description. I will link in description all this previous analysis, so you can go and check it out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover or analyze in the next videos. But at the moment, what do we have and how we can be looking to capitalize on the next move for this pair? Now, what we currently have is a market which is testing the neckline of this daily W formation, which is an area of previous daily resistance, which is now turned daily support here. What we can also see is that, as I have just explained, if after an impulse you want to measure the correction, you have to take the Fibonacci from the low to the high of the impulse, which in this case is from this low to this high. And what we can see is that the market retraced exactly to this 50% retracement. Actually, if we look closely, we can see that the market slipped all the way down to the zone, which is in between the 50% and 0.618. Now, if you're asking yourself, why did the market go and started to get rejected exactly from this area? Because the 50% and 0.618 are exactly in confluence with the previous daily resistance, which is now turned support. So from this zone, we do expect the market to get rejected to the upside, for the move to the upside to fill in the wick that we have already seen from a weekly perspective, the pattern that I have just spoken about. So at the moment, everything is lining up for a move to the upside on this pair. So how we will be approaching this kind of opportunity with students. Now, before I show you that, let's first go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what hedge funds are currently doing in the market. Now, there is a delay with the release of the new report, so we still don't have the new report. However, what we can see from the previous report is that hedge funds clearly were not adding longs from a pound perspective. They were not bullish on the pound. In fact, we can see that longs had reached one of the lowest levels that we had lately, and the shorts have reached one of the highest levels that we had lately, with 47.2k shorts and 27.4k longs from an institutional perspective, with an added 1.6k shorts and closed 400 longs with the last report. In fact, net positions reached the minus 19k level, which is a strong decrease from the positive 12.7k that we had here, meaning that we went from having more longs than shorts with 46.5k longs and 33k shorts to having all the way up to the opposite direction, actually all the way down to having the completely opposite, with minus 19k net positions, so more shorts than longs on the pound from an institutional perspective, with 47k shorts and 27k longs. So the pound is very weak. So if we are to see this move to the upside, we have to first wait for the new report and see that hedge funds are clearly creating an accumulation phase inside of here for a move to the upside. If we will not see that, it will be too risky to be looking for the long, so we will not be looking for the long. We will simply wait for either an accumulation phase inside of this area or for the new report to show that clearly hedge funds are adding longs. because we only want to be trading alongside with institutions. Now, what we see on the JPY is that we did already have with the previous report some cutting of the net positions from a very positive 41.8K all the way down to 29K, with 15.3K longs closed with the last report alone, which is very bearish for the JPY, which means that we can easily make the move to the upside. If we will see a massive JPY weakness, we can easily create this continuation to the upside and make a higher high. So what we want to see is, first of all, we want to see the pound getting stronger, so either an accumulation phase or clearly reading that hedge funds have started adding longs on the pound. And from a JPY perspective, we want to possibly see shorts getting added with the new report. But anyway, we already see that hedge funds are not interested in the long anymore and have closed massive amount of longs with the previous report. So the move to the upside is definitely possible. We just have to wait for these two things to be clear just to have the best probabilities in the market. But in general, the way in which we will be approaching this opportunity with students is, as usual, being reactive and not predictive, because the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes for the direction of the market, but the best timeframe for confirmations and entries, that is the 4 hours. So what we will be doing with students inside of this area is monitoring price action on the 4-hour time frame, waiting for the market to shift from a 4-hour bearish market as we have right now, because now on the 4-hour everything is bearish. So we will be waiting for the market to shift from such a 4-hour bearish market to a 4-hour bullish market. And if the market will shift from a 4-hour bearish to a 4-hour bullish market, at that point we will be adding GBP JPY to our watch list with students, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and completion of this impulse, correction, and impulse pattern to the upside and creation of a higher high. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education on all my platforms. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering all your questions personally every single day. So I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.